Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Quant. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, this was requested multiple times in the comment section, so we're going to take a look at Quant finally, and I hope you enjoyed the video, and let's jump straight into it. Taking a look at the daily chart, as you can see immediately, we have a support block over here. So this one is set up between $107.80 down to $101.60. So this is based off of all of these local lows that we printed since November of 2022. So we had two touches in November, actually three for that matter. We had one in December, one large one, and one in January, and then we had another one in March this year and another one in April this year. And we also have a descending resistance trend line, as you can see, and every time we come up to test that trend line, we fail to break out. We have another move down, we test it once again, fail to break down, another move down, and so on and so forth. So the more you test a level, the higher the chance of you breaking out. But we find ourselves right now in a descending triangle. So typically this pattern is predicting a break to the downside because the lows are getting lower, but the highs are lower each time, but you're bouncing off of the same horizontal support. So at some point, the support is going to crack because it just cannot hold the weight of the resistance, and it's just going to plummet. So if that is going to happen, we have to take a look at some local lows here for us to target. For example, one would be here all the way down at $90.01, or roughly $90. That's right. So we have, there we go, 90.3. That is going to be a major support for us. As you can see, we did back test it as resistance back in July last year, and we back tested it as support in January of 2022. So this is quite an important support that we want to hold. So if by any chance we manage to break below the purple support blocks, we could retest the white support trend line, come back for a back test of resistance, and come back to the white trend line one more time. Because typically, once you lose a support level, you come back up to retest it as resistance. On the contrary, we could break out, which is unlikely. We could break to the upside, of course, and have a back test of support of the previous resistance and continue on from there. Now, if that was to happen, we would have to break above our January 2023 high, because if we don't, and we print a lower high, and then we come back down, crashing towards the yellow trend line once again, that is going to be a negative thing in my opinion, because you're going to be continuously printing lower highs, and you don't want to be doing that. So hopefully this time when we break out, we could see another move to the upside, or a new move to the upside above this local high that we printed in January. So $196 is going to be our major target here, the 1.618. If we break above the January local high at $156. That is going to be our target if we manage to break above that. So if we get above this here, then we're going to be targeting that. So if the price goes above that level, the 1.618 is going to be your technical target. And I think we could be expecting an alt season in the near future, and I'm expecting a bull trap sometime in August/September. So by the time we get there, we could be sitting at this exact spot once again, just like we did back in October 2022, before we see another pullback. Taking a look at the daily RSI, you can see that we are in some sort of a symmetrical triangle. So this is a pattern without any bias, and you could be looking at a trade here if you run into the resistance one more time, just like you did over here, and just like you did over here, and just like you did over here. That is, of course, if you're looking for a swing trade. But if we have a pullback or another pullback, you could be looking at the support trend line here to hold us, and that would be a nice buying opportunity. In all fairness, I would be dollar cost averaging right now, especially if you don't have a position in Quant. But I don't personally, but I'm saying if you were looking to buy, or if I was looking to buy, technically speaking, this is definitely a level you want to be eyeballing. So the support between $107 to $101 is going to be a massive, massive level. But if we zoom out, you can see that since the listing on Binance in 2021, And we've had a pullback, obviously, into the bear market low here in June of 2022. Since then, we've actually appreciated 462% in October. Then we had a 70% pullback, or was it a 60% pullback? Let's see. Yeah, 60% pullback. And then from that pullback in November 2022 into January of 2023, we had a 73% move to the upside. So I would be looking at these levels right now. Obviously, do not go all in. This is not something that requires all of your money. Be patient with it. If we start dropping below the purple support blocks, make sure to average in more. And I would say if you get down to $91, that's where I would put in quite a lot of money, to be honest with you, if you're looking for a strong position. Now, if I take a look at CoinMarketCap, you can see we are sitting at rank number 41 with a $1.365 billion market cap. The circulating supply is 12 million coins. That is 81% of the total supply. Those tokenomics are pretty good. I didn't research this project prior to making this video because I was just looking at it from a technical standpoint. But Quant launched with the goal of connecting blockchains on a global scale. So just because I think interoperability is going to be a major player, or any project that is involved with interoperability between blockchains is going to be a major player in the next bull market. So Quant is definitely going to be on my radar. I'm going to save it into my playlist, and I do want to switch over to the weekly chart right now. Taking a look at the weekly chart, immediately you can see that we have a Fibonacci retracement set up with the swing low printed in June 2022 and the swing high printed in September of 2021. The 1.618 target here is going to be sitting at $1,254. That could be a bit too much in my opinion. So we can be a bit more conservative and we can start targeting $837 and $632. Those two targets are going to be massive in the next bull market, in my opinion. So these are going to be your take profit zones. Not a financial advice, of course. You can hold it, until $1,000, $2,000, whatever you want to do. I'm just laying out what I see on the charts based on the Fib retracement. So, of course, if there's a lot of demand, the project gets a lot of attention, the marketing is very good, we could see this absolutely take off into space, into the stratosphere. But we cannot assume that for every single project. So that's why we're not going to be assuming it for this one. Now we're breaking below this support trend line here. As you can see, we've been holding it since August last year, and right now we're breaking below. This is not a very good sign, to be honest with you. We're holding the 0.382 at $108. If we start pulling back down, I would be eyeballing the 0.236. That's going to be at around about $81. So that is going to be another amazing opportunity for you to average in. As you can see, we did have a bounce off of this level back in, when was that? Back in August of 2022 or July. As you can see, since then, we had a move to the upside and we haven't really come back down to the 0.236, which right now we can do that if we continue with this pullback. We backtest the levels as resistance and we bottom out somewhere here. Even if that was to happen, that is still bullish because you're printing a higher low on the grand scheme of things. And that is what is important at the moment. Taking a look at the weekly RSI, we're not really doing a lot. I would just add a trend line here just to be aware of when you break above that trend line, that's going to be a massive, massive, massive thing. And so the RSI is pulling back down. We're sitting at the index of 44. So I would say this is a good area to start dollar cost averaging. Like I said multiple times throughout this video, this is not where you want to be selling by any means. If we take a look at the stochastic, you can see that we are in the oversold below the index of 20. And the last time we were sitting there was back in December of 2022. And before that, back in June of 2022, when we actually bottomed out. So this is definitely something that you want to be keeping an eye on if you were looking for entries. We are potentially going to be getting another bearish cross on the weekly chart. I would not really be paying attention to these crosses on altcoins before we get a bullish cross on Bitcoin's weekly chart. Once Bitcoin's chart has a bullish cross on the weekly, which is when the 20 EMA crosses above the 55 EMA, that is when I could start entering altcoins if I'm really looking to be extra safe, okay? But you're gonna be missing out on some gains. Just understand that. So thank you very much for watching this video. If I missed out anything important, please let me know down below in the comments section. But like I said, I don't see Bitcoin dropping back down to $20,000 as of right now. I don't think there's any incentive for that. If that is going to happen, obviously we could retest $81 or even lower than that. So be ready for anything, guys. Be ready for both outcomes at all times, and have some money on the sidelines for any black swan events or for any flash crashes. Thank you all for watching the video. I'm going to see you in the next one. Take care.